The American housing market is experiencing a silent crash right now, and the data is screaming if you know where to look. While mainstream media pushes the "recovery is here" narrative, inventory has exploded 32.6% since the beginning of 2025. Over 20% of all listings now feature price reductions. Markets like Sarasota, Florida, are seeing mass delistings as sellers pull homes entirely rather than face reality. In Maryland, days on market have doubled. Phoenix, Arizona is watching luxury inventory pile up like it's 2008 all over again. Here's the truth Wall Street doesn't want you to hear. Home prices are still inflated 30 to 50% above sustainable levels. According to Bloomberg analysis, year-over-year price growth has collapsed to just 1.3% as of August 2025. Compare that to the 12% annual increases we saw in 2021 and 2022. That's not a healthy market cooling down. That's a market in full correction mode. And for millions of Americans who bought at the peak, it's already too late. Let's talk about what's really happening on the ground. Homebuilders, the supposed bellwether of housing confidence, have been offering mortgage rate buydowns as low as 3.99% to 5.12%. Think about that. They're essentially paying tens of thousands of dollars out of pocket just to artificially lower your mortgage rate and move inventory. And it's still not working. New construction is sitting. Buyers aren't biting. Because even at 4% interest, a $450,000 house that was priced at $250,000 in 2019 still doesn't make financial sense. The math is brutal and simple. Let's run the numbers. A $300,000 home at 3% interest gives you a monthly payment of about $1,265. A $450,000 home at 6% interest? $3,000 a month. Even if rates drop to 4.5%, you're still paying over $2,500 monthly. And here's the kicker. That doesn't include the hidden costs that are absolutely destroying homeowners right now. Property taxes. They're calculated on your home's assessed value. If you overpaid by $100,000, you're now paying taxes on that inflated value every single year. Homeowners insurance has doubled or tripled in the last 3 years. In Florida, the average premium has jumped from $4,000 to $12,000 annually. Some coastal properties are paying $20,000 a year just for insurance. HOA fees are skyrocketing nationwide, with communities raising dues by 50 to 100% to cover maintenance costs that exploded during inflation. These aren't one-time costs. These are permanent financial anchors tied directly to your overinflated purchase price. And here's where the market dynamics get really dark. First-time buyers, historically the engine of housing demand, have dropped to decades-low participation rates. They used to represent over 33% of all home purchases. Now they're barely a fifth of the market. The median buyer age has jumped to 59 years old. Read that again. 59. The American housing market is now dominated by wealthy retirees and cash-heavy investors. Young families, millennials, Gen Z, the people who should be forming households and driving demand, they've been completely priced out. And they're not coming back until prices fall dramatically. The psychological shift is real and spreading fast. Browse the comments on any real estate video. You'll see the same sentiment repeated thousands of times. I'm not overpaying for someone else's already overpriced house. Interest rates are irrelevant when prices are inflated. I'll take 8% interest and a 50% price drop any day. This isn't just YouTube bravado. This is a genuine buyer boycott forming in real time. And when buyer psychology shifts from FOMO to FUD, fear, uncertainty, and doubt, markets don't recover quickly. the pain is spreading beyond buyers into entire industries. Home inspectors, who were booked solid for months in 2021, are now facing layoffs and closing businesses. Mortgage brokers are desperate for business, begging for rate cuts not to help buyers, but to trigger refinance waves they can profit from. Title companies are cutting staff. Real estate photographers, appraisers, even moving companies are feeling the slowdown. The housing ecosystem that supports 30 to 35% of U.S. GDP is weakening in real time, and mainstream economists are pretending everything is fine. Let's address the elephant in the room: the Federal Reserve rate cut. Yes, the Fed lowered rates by 50 basis points, and mortgage rates did drop temporarily. But here's what they don't tell you. Mortgage rates don't directly follow Fed rates. They track the 10-year Treasury yield. And guess what happened after the Fed cut? The 10-year Treasury actually went up. Bond markets are pricing in inflation risk, government debt concerns, and economic uncertainty. Mortgage rates briefly dipped below 6.3%, but have already started climbing back. The magic wand everyone expected? It doesn't exist. It never did. So what happens next? There are two realistic scenarios. Scenario 1. Home prices continue declining alongside stagnant rates, potentially dropping another 20 to 30% over the next 2 to 3 years until they reach sustainable price-to-income ratios. Scenario 2. We enter a prolonged period of stagflation where prices barely move for 5 to 10 years, while inflation erodes purchasing power and real value slowly corrects. Neither scenario is good for anyone who bought in 2022 or 2023. Those buyers are facing years of being underwater or stuck in homes they overpaid for. The people experiencing buyer's remorse right now aren't just statistics. They're real families who bought at the peak and are now trying to list their homes, only to realize they can't even break even after commissions and closing costs. They're stuck, and the word is spreading. When your friends, family, and coworkers tell you, "I wish I'd waited," or "I regret buying," that psychological contagion erases FOMO faster than any rate cut can restore it. Bottom line, this isn't fear-mongering. This is pattern recognition based on data. Knowledge is protection. Don't let desperate agents or loan officers pressure you with "buy now" before rates drop further and prices surge. That's the exact same fear-based tactic that burned millions of buyers in 2022. Prices need to correct. They will correct. The only question is how long sellers can hold out before reality wins. If this data-driven breakdown gave you the clarity that mainstream media refuses to provide, hit that subscribe button to Housing Intel right now. We deliver real estate intelligence based on facts, not hype or agendas. Smash the like button if you found this breakdown valuable, and drop a comment below. Are you buying, waiting, or selling in this market? We read every single comment. Stay informed, stay protected, and we'll see you in the next intelligence briefing.